Welcome to Talk Tickers, where we break down the latest earnings calls. Today, we're diving into Sensient Technologies, ticker SXT. And let me tell you, the story this quarter was, well, a lot more colorful than the headline numbers might have you believe. So if you just glance at the top-line numbers, you see a pretty classic mixed bag. On one hand, adjusted earnings per share beat the consensus by a solid 6 cents. That's great. But then you look at revenue, and it came in just a little shy, about $3.4 million short of what the street was expecting. Okay, so usually a revenue miss, that spooks the market, right? But with Sensient, something totally different happened. After a quick dip, the stock actually rallied, closing up 3% the very next day. So, what did the market see that wasn't obvious from the headlines? Well, it all comes down to margins. Yeah, the real story here wasn't about revenue at all. It was all happening in the engine room of the company. We're talking about some incredible margin performance. And it's all thanks to a strategy they call quality through mix. Just look at their color group to see exactly what I mean. Revenue grew by a very respectable 6.9%. But get this, operating income absolutely surged by nearly 24%. I mean, when your profit growth is more than 3 times your revenue growth, that is some serious operating leverage in action. It's a huge signal. So, what exactly is this quality through mix strategy? Well, it's pretty smart. Basically, they're deliberately shifting away from selling cheap commodity-style ingredients and focusing hard on the complex, high-value stuff. So think less about selling a basic color and more about providing these super precise, technically difficult color matches that are way more profitable. And you can see this strategy working its magic across the whole company. I mean, check out the flavors and extracts group. Their revenue was actually down more than 3%. But, and this is the amazing part, their operating income was up by a whopping 8.6%. That just proves they're selling a much richer, more profitable mix of products, and that cash is flowing straight to the bottom line. It is textbook execution. Okay, but here's the really crucial part. This incredible margin strength, it's not just some one-off fluke this quarter. No. This is the payoff from a huge, long-term bet the company has been making for more than a decade. For over 15 years, Sensient has been pouring money and resources into the shift from synthetic to natural food colors. They saw this coming a long, long time ago. The CEO, Paul Manning, he's not shy about it. He calls it the single largest revenue opportunity in the company's entire history. And now, that slow-burning trend is getting a massive injection of rocket fuel from a whole wave of new state-level regulations. But here's the catch, right? You can't just flip a switch and go from synthetic to natural. The CEO was crystal clear about this on the earnings call. The biggest problem for the entire industry, the major bottleneck, is getting the raw materials, the actual botanicals. He said flat out, there's just not enough to go around. And that's the very problem Sensient has spent the last decade plus working to solve. And believe me, the clock is ticking. You've got West Virginia's ban on synthetic dyes that kicks in on January 1st, 2028. That's basically setting a de facto national standard. So management is pointing to 2027 as the big inflection point. That's the year when you're going to see all the big food companies scrambling like crazy to reformulate their products. Nobody wants to be left behind. So, how is Sensient getting ready for this 2027 gold rush? Well, they are absolutely putting their money where their mouth is. Let's look at the financial plan. Okay, look at this. They just jacked up their capital expenditure guidance for the full year. We're talking about $100 million now, up from their old range of $80 to $90 million. And where is all that extra cash going? It's pretty much all dedicated to one thing, building out more capacity to produce natural colors. They are getting ready for the floodgates to open. And this spending spree, it's directly fueling their confidence for the rest of the year. They're not just throwing money at the wall. They're expecting real results from it. So, while they kept their revenue outlook the same, they raised their guidance for adjusted EBITDA to high single-digit growth. And even better, they see adjusted EPS climbing all the way into double-digit growth territory. That is confidence. All right, so that brings us to the big finish. We've got a strong fundamental story, a clear catalyst from regulators, and a management team investing aggressively. So, what's our take? What's the call? So you have this huge policy-driven catalyst coming down the pike. It's going to shake up the entire industry. The big question for any investor is, how do you even play this? How do you position yourself for this shift? So here's a kind of wild but totally plausible way to think about it. a natural color capacity futures trade. It's not just a bet on one company, but a bet on the entire supply chain. Remember the CEO said the biggest constraint is raw materials? Well, if you follow that logic, you'd expect a massive price spike in key botanicals as all this mandated demand suddenly kicks in. And on the flip side, you'd bet against the pure play synthetic dye makers who are about to face some serious headwinds. So, for our next call on SXT, we're officially assigning it an outperform rating. The thesis here is pretty straightforward. Sensient is, without a doubt, the best positioned company to cash in on this huge policy-driven wave of demand that's about to crash into a supply-constrained market. We're looking for them to continue expanding their margins in Q3, and we expect the stock to have positive momentum heading into year-end as more and more of Wall Street catches on to this natural color conversion story. And a quick reminder, as always, this is not financial advice. Always conduct your own due diligence before making any investment decisions.